Imagine walking into your dream home, keys in hand, knowing that you successfully secured a mortgage loan. Building your credit plays a vital role in making this dream a reality. The three main factors of home loan approval are qualified income, debt to income ratio, otherwise known as DTI, and your credit scores. Today, we're going to focus on credit because 45 million people in the United States have no credit history or low credit and need to build up their credit quickly, which can be pretty hard to do. Lenders carefully assess your credit worthiness to determine if you're a good candidate for a home loan. You can be debt-free with high income, but unless you plan on buying a home in cash, you'll still need credit. So let's dive into the details of building credit so that you can get approved. First things first, check your credit report. It's essential to know where you stand. Lenders will review your credit history, looking at factors such as your payment history, credit utilization, and the length of your credit history. By actively building and maintaining a positive credit history, you'll demonstrate to lenders that you're a responsible borrower. However, you'll definitely want to make sure that you avoid the common mistakes of monitoring the wrong scores. The only scores that matter are your FICO scores, which are the industry standard scores, unlike what you'll find on free credit monitoring sites like Credit Karma, Credit Sesame, or Credit Signal. Free monitoring sites like the ones I just mentioned will show your Vantage 3.0 scores, which are only designed to teach you about credit and educate you on what impacts your credit. But if you want to see the scores that the lenders will see, again, you'll need to monitor your FICO scores, your FICO scores, which, contrary to popular belief, are never free. Even when a mortgage lender like Rocket Mortgage, for example, performs a final credit check, the cost of the hard pull will be included in the closing costs. And if you don't believe me, go ahead and check your closing disclosure. There you'll find at least a $39 credit check fee. There are various FICO scoring models, but the most common one that most lenders use is FICO 8, and that's the one I recommend you focus on the most. With that being said, some mortgage lenders will actually use FICO 2, 4, and even 5. The scores that you see may vary slightly, but the 5 main factors remain the same across the board, no matter the model. Now, I know what most of you may be thinking. What credit scores do you need to get approved for a home loan? And to be honest, the answer varies based on the program, but I'll give you the most common ones. First, the minimum FICO score for both an FHA and a VA loan is usually a 580. FHA loans are one of the best options for borrowers with lower than average credit scores and also people who don't have much money saved up for a down payment. Both FHA and VA loans are backed by the government. Another government loan is the USDA loan, and the minimum credit score required to be approved for a USDA loan is a 640. Next, we have conventional loans, which are best suited for borrowers with good credit and money saved up for a down payment. The minimum credit score for a conventional loan is 620. And if your credit scores aren't high enough right now to get approved, don't beat yourself up. It just means you need to begin building and restoring your credit. If you need help with credit repair, my team at Greenscale Credit will definitely help you. Just use the link down in the description below to schedule your free consultation and we'll give you a call. Now let's talk about how you can improve your credit so you can get those keys. One crucial aspect of building credit is paying your bills on time. Consistently meeting your financial obligations, such as credit card payments, loans, and utility bills, shows lenders that you can be trusted to make timely mortgage payments, which is all they really care about, right? Another factor lenders consider is your credit utilization. This is the percentage of your available credit that you're using. Keeping your credit card utilization low, ideally below 30%, demonstrates your ability to manage credit responsibly. By paying off your balances or keeping them low, you'll show lenders that you're not overly reliant on credit and can handle the financial responsibility of a home loan. Having a healthy credit mix is also important. It means having a variety of credit accounts such as credit cards, loans, and possibly, let's say, a car loan or a student loan. This demonstrates to lenders that you can manage different types of credit effectively, which is super important. So if you're watching this video and you have no open loans of any kind, or you've never had a credit card or a line of credit, you'll definitely want to check out that video up there to learn about some of the best credit builders that you can sign up for. Lastly, let's say your scores are high enough and you're thinking about applying for a mortgage loan very soon. It's crucial to avoid opening new credit accounts shortly before you apply for a home loan. Multiple recent credit applications can raise concerns for lenders and negatively impact your credit score. It's honestly better to just maintain a stable credit profile and focus on strengthening your existing credit history. I say this because if you apply for a mortgage loan and they see a new inquiry on your credit report, they're going to ask you about it. They're going to ask what you applied for, right? So for example, let's say you recently purchased a new car. They're going to ask how much your car payment is, and they're going to be forced to include this in your debt to income ratio to make sure you can still afford your mortgage payment, which unfortunately can affect your ability to repay, which is a major thing, and no mortgage lender out there can write a loan and get you approved if the math isn't mathing and it's starting to look like you won't be able to make that mortgage payment, which unfortunately can result to you no longer qualifying for that mortgage. Remember, both building and repairing your credit takes time and consistent effort, but the rewards are so worth it. Remember, both building and repairing your credit takes time and consistent effort, but the rewards are so worth it. Taking proactive steps to improve your credit will enhance your chances of securing a favorable rate and term for your loan, and also, of course, make your homeownership dreams come true. And guys, if you would like me to make a video going in more detail about DTI, which is debt to income ratio, and qualified income, definitely leave a comment down below and just let me know. Otherwise, I hope you enjoyed this video and found it helpful. I hope you have a great rest of your morning, afternoon, or evening, whatever time of the day it is. And thanks for watching. I'll see you in the next video.
Meet Daniel. He owns a beautiful home, has a stable, high-paying job, and recently purchased his dream car. Life is great, until one day he, along with hundreds of his coworkers, are laid off. Now Daniel is unable to pay bills for several long months. Now his home is under foreclosure and his car was repossessed. Daniel was able to find a new job, but unfortunately the damage has already been done. His credit was ruined. It seemed like there was nothing he could do until a friend told him about our company Greenscale Credit. At Greenscale, we help improve your credit wellness, allowing you to be approved for the best credit cards, access the lowest rates on auto loans, home loans, and more, but most importantly, giving you a fresh start. Our team of friendly experts will walk you through the entire process while educating you along the way. With our help, Daniel was able to remove collection accounts, late payments, and repossessions from his credit report, resulting in significant increases in his credit score. Thanks to Greenscale Credit, he was able to save his home and purchase a new car with a lower interest rate. Life is finally getting better for him. Bad things happen to good people. The good news is bad credit is temporary. Take the first step on the road to recovery and go to www.greenscaleacredit.com to sign up for your free credit consultation today.